All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, March 8th, 2021. For the first 5 minutes, I'm just going to talk, and I'm going to do the best I can to give an idea what the heck is happening to our markets over the last week. And that's really the question that people are asking. So as I spent my weekend, I honestly felt like I had to figure out what was moving our markets and why. What seemed to be pushing our markets lower and higher? What is the issue? And we've been told from the talking heads on TV that it is interest rates on the 10-year. And as we've gone through, I've sat there and I was like, I just don't see it. I don't see it. I don't understand. And if there's one thing I've learned in the stock markets always move on money flows. So stock markets always move on money flows. And money flows are really currency movements. The pound against the yen against the dollar against the pound, the dollar against the euro. More often than not, our markets are moving because of interest rate changes. When we say money flows, we're saying money is coming in and out. And so as I went through the weekend to say, all right, I need to spend my time trying to find out why markets are moving to give my clientele at least an understanding of what I think is happening in the stock markets and why. If you don't understand what's happening in the stock markets, you shouldn't be placing trades. You get jumbled, you put things on, you take things off, you go 10 different ways to Sunday, and inevitably you're losing everyone money. Not my intent, not what I want to do. So I spent the weekend going through money flows, why money's moving in and out. And the first thing I noticed is even more money is moving from Europe over the United States. And I thought, yeah, that kind of makes sense because in all honesty, they've got a negative interest rate. So money wants to go where it can make money. Then I noticed in Asia, money started to flow from Japan and from South Korea. And money has always flown, or money flow has moved in the United States from China for forever. I mean, they've always put money over here with us. And as I started to look around at South America, money flows are increasing from the bigger South American countries like Brazil and Argentina, Peru. And as I took a look, I realized, money was flowing from Japan. Japan has basically been a net seller of U.S. debt. They amassed a whole bunch as they went through their 3 decades of zero growth. They used that money and plain and simple, they've been selling it off. They've been selling it off for a tidy profit because the interest rates are so much higher on the debt that they've held for so long. But it was funny because the first thing I heard at 4 o'clock in the morning, David Tepper making comments on the inflows from Japan. And when you see who's buying the U.S. debt, it typically is the U.S. where the Fed's buying it. We're trying plain and simple, we're trying to keep interest rates down. So we're buying our own debt, basically doing the infinite banking concept. We're going to pay ourselves the interest back. And off you go, right? Well, number 2 for our U.S. Treasuries, and you can find most of this information with a simple Google search. who's purchasing the U.S. debt, and you'll go to the Securities and Exchange Commerce site, or you'll go to the Fed site, and they list it out there. But most recently, you'll see U.S. first, China second, and then Japan was third. And usually you see Japan on the selling side. You'll see NAFTA in there. You'll see the European Union in there. You'll see primarily some individual countries like Australia, New Zealand. So off you go, and you noticed all of a sudden that Japan was buying debt. And when you start to put the dots together, Japan 10-year pays, I want to say it's 1.1. And the US 10-year, do you know how much that pays? I'm going to say 1.6 right now. I don't know the exact number. But if you take a look at this, if you arbitrage Japan debt to US debt, what is happening? If you arbitrage Japan debt to US debt, what's happening? Who comes out ahead? There you go. I see a couple answers coming in here. Us, you win. I'm not sure I agree with that. Oh, there. I'm sorry, Mud. I'm reading the whole thing. Borrow money from Japan, invest in US, and you win. So you're close, right? Japan is selling $1 billion of their debt. They're taking that money into Japan, right? Selling it off to the US, and the country of Japan is going to make 0.5%. For all intents and purposes, the US is financing other countries' debt. Well, Kevin, Japan needs that debt. You're right. They need that cash. They don't necessarily need all of it, but you can borrow on 0.25%. And because the US interest rates have spiked, well, Kevin, why have they spiked? Well, we've got to finance $1.9 trillion that technically the US economy doesn't need. So other countries around the world know that, and we're like, oh, we're not going to buy our debt unless you start to raise those interest rates. And so all of a sudden, when you change directions and the interest rates spike, we're higher than Japanese interest rates, or basically higher than any rates across the world right now. Countries are selling their bonds. They're taking that money in and putting it in US treasuries. And they're still borrowing against those US treasuries to get the money they need, and going to make about 0.25% interest above and beyond. We are financing the world's debt right now because other countries can borrow dollar for dollar against US treasuries. It's the reserve currency. So, point number 2. What does this do to the US dollar? What is this financing, or this type of financing, or run with inflows into the US dollar? Can someone tell me, what does it do if a bunch of money rushes to the US? All three of you immediately should go up. Higher dollar, stronger dollar. Stronger dollar, right? Which means US companies, domestic, right, have inflation. US companies that sell overseas have more expensive products. And the big one, the cost of purchasing products, that's not the correct term, materials to create your product goes up. Tepper came out with this. He was talking about it at 4:30 in the morning on Bloomberg. really was the talk of Joe on the morning show at 5 o'clock in the morning on CNBC. In general, so I'm going to put Tepper thinks, in general, the bond market will stabilize. And it should stabilize somewhere between 1.3 to 1.7. Could go to 2%. If what she thinks will happen, if the bond market stabilizes, the U.S. stock market will skyrocket higher. Why would you think the U.S. stock market is gonna skyrocket higher? It's a matter of GDP, right? People are going to be willing to pay higher prices to get out, to go back to movies, to buy stuff that they would have bought last year. We've got stimulus checks. We're going to cover ourselves for this year, or as Tepper thinks, we should be good for several months. We should be good for several months. Now, how long is several months? Someone's already said it. And Abraham, you've been around the block a couple times, so you're spot on. The Fed will probably take a nap until September, which means the Fed won't do anything to stunt U.S. growth. September 3rd, worst month historically in the S&P 500. October, the worst month. And what's the last thing that we're looking at for this time frame? New fiscal budget, and someone has to pay for all the stimulus. So higher taxes are on the way, which means, I don't know, do we get 4 interest rates consecutively in a row? September, December, January, March? Does our stock market grow and fight it off? This comment was made to me. Kevin, why is the NASDAQ getting killed? Anyone have any idea? Could it be that they are plain and simple, I'm going to say, investment heavy industry? Don't they borrow a bunch of money to buy up? Usually tech companies are seriously leveraged financially. They borrowed a bunch of money. They have bought other businesses. They need the money to create their product, to produce it. It's almost like the auto or the materials industry, right? Comment just made, inflation hurts growth stocks. Of course it does. It hurts stocks that are leveraged. Leveraged stocks that are borrowing money, it hurts. Well, Kevin, explain Apple. Well, I really can't explain Apple. I mean, they have borrowed $15,000 and they've done it at 2% interest rate. 5,000. 15 billion, 13 to 15 billion dollars, excuse me. Apple has borrowed somewhere between 13 to 15 billion dollars in bond funds over the last little period of time. The NASDAQ was 5 months above the 50-day simple moving average, one of the longest stretches ever. Thus, a correction was overdue. The S&P hit that magical over 27 times forward earnings. And you always get a pullback or a correction 100% of the time. It has not happened, but it will eventually. I'm really struggling with letting things run in this environment. If you can take a look at what happened today, Keith and I were on the phone a lot today. As a group, not bad. We're up $60,000 to $58,000 today. I think it's 58,060 after hours. But what worries me is looking at what we went through today on the SPX on a one-day chart. This was awful. We started to the downside. In fact, we started and touched 38.33, up, back down to retest a couple times at 340. Oh, you know what? Things are good. We're looking good. We're up at that 38.77. Triple top, right? Triple top at 11:30. That's a little after the lunch hour because this is Mountain Standard Time, right? Usually what we see is 12:30 to 1:30 Eastern. They go to lunch. They were an hour late today. Stock market fell. Hey, it's coming back up. Another triple top. We should be good to go. But this time the triple top created the sell-off. And boy, we finished down at the lows of the day. Well, Kevin, what did you guys do today? Well, I'm going to go through a couple of our base positions. We're a little shocked Apple. The Apple put does not seem to be in place. Apple was one of our biggest losers today. As we looked at Apple, Steve and I had a comment that went something like this. Women, please put your speakers on mute for a second. But our comment was something like, shit. How did we protect Apple from 145 to 130, take it off for a small profit, and miss from 130 in the 50-day all the way down to where we're at right now? We basically missed from 130 down to 116, about $14, $15 of a drop. What idiots can't see a breaking of the 50-day and decided not to put protection back on? Now, I've got the answers. I can tell you day by day, hey, it held it. Hey, it was an up day. Hey, it tested it. Hey, it went up, finished on the lows. Oh, it's an up day, 2 up days in a row, holding the pivot point, back above a big rise. Started to fall in a new pivot point, but we had the 120s. I mean, we have all the answers, but all of our answers have been wrong. We have not done a good job on Apple, but we have done a great job on beating ourselves up. And we broke down outside of a trend line today, but we do have the 200-day that's our saving grace. We fall below 113.80. Long puts are going on because the downside will most likely be right here at 105.27. Baidu. Man, did we nail this one nicely. We took all of the 22s basically off the table. We might still have a couple out there, but we took all the 22s, January 22s off the table for a profit. Pushed everything out to January 23s. The January 23s that we had, we added protection. We added short sides to it or downside protection through short calls on the long call leap stock replacement strategy. And for the stock, we protected at 320. It has lost, it has lost $120, $122. We did not protect it at 354.82 intraday. We did do a pretty good job at 320 though. We look amazing on Baidu. A core holding, still got its teeth kicked in a little bit, but in all these stock replacement strategies, we're in a risk-free strategy. We've got protection in place. We're making up some of that downward movement. We look pretty darn good. We have puts on 320. What we spent $28 is worth 88, 60 bucks. That's a lot of shares we get to pick up. In fact, if we spend the money we used for the puts, we have $500,000 ready to add more shares. And that's only on a portion of them. Don't forget, we got another section of them right down here. Another $283,000. We're looking pretty darn good as a whole. We gave ourselves plenty of time. We took good credits in. We can take some of these credits off and let it run when Baidu comes back. We're looking really good. Disney. Pretty dang cool to see Disney go from, what, 91 up to 201, almost $12 today. And we protected Disney at 200. We've got some protection in place. Kevin, why would you do that? Well, because just the California parks are opening, that doesn't mean the movies are opening. They're not opening till April. It won't be part of this earnings growth. And because if you look at Disney in a couple different ways, Disney's hit that point. 1, 2, this is the third time. Can someone tell me, is this a triple top or a triple bottom? Well, Kevin, we don't know yet. We don't know if it's a triple top or a triple bottom. What we do know, it's close to being overbought. It is overbought for institutions. We're still not bullish here. And it's right at an R1 resistance level at 203.75. I can't predict the future, but it looks like a triple top is more in order than a triple bottom. I do like going off to FinViz because their charts are pre-made for us, right? If I was to look in Disney on FinViz, man, it's the third time it broke up above, and it seems to be coming back down. In fact, you could say the fifth time on the way up. It's interesting right now. It does look like they're starting to squeeze, and we're definitely looking at a pinch right here. This looks more like a Bollinger Band. Bounces outside, comes right back down. We decided to spend money to protect Disney today. Ford. Moving nicely. Guess what? We're ready to put some protection on Ford at 1250 because it seems like it's bouncing away from that. Visa. Breaking above, trying to break above long-term resistance. Guess what? If you go and look at Visa, we're going to be cutting it right down to the wire. A lot of our Visa shares we've got covered with a 2250 covered call. We got $4 of credit. It's like we're going to sell it at $26.50. We've got 2.5 more weeks to see if we're going to be out of Visa and if we're going to convert all those shares into the 225 leap long calls. I think Cave gave me some crap on Under Armour. Kevin, I don't get your Under Armour. I'm not into it. I don't believe in it. That's not fair. That's not what he told me. I think he told me to be careful of Under Armour, right? Maybe that was Bill. It wasn't Keith. I think it was Bill, actually. I'm going to pick on Bill a little bit here. Man, if you do the numbers, you have a great return on something that we've picked up 100% shares on for some of the people that we have. It can still go up to 25, easy. Bank of America, higher interest rates, bigger spreads, they can make more money. It's on the top end of its line. We might roll our protection up. JP Morgan, same thing. Breaking out, breaking above. Really good for the spreads we have on. Caught that one, Bill. Really good for the spreads we have on. Little difficult for the stock ownership. It'll be very interesting to see what happens in the next 2 weeks. It'll be interesting to see how accurate Pepper is on our stock market. And it might be a really ugly summer. If it's a really good summer and we do have growth to teach all those people who sell in May and go away, we get some really good growth through summer. Man, this end of the year is going to be a full collar trade, as much protection on as possible, as our government kind of screws us and puts us in a pretty poor position with all the stimulus, as the Fed has to try to contain inflation, as our markets don't run too hot, which is just a fancy way of saying, hey, they get too far above their 50-day, they get overextended in valuation again, they go from 27 times earnings to 32, and then they fall all the way back down to 21. That's how these corrections in these bear markets are created. It's created by that money flow and trying to control the money flow when you're the one country that is financing the world's debt. I can't believe we're going to spend $1.9 trillion for stimulus. I just don't get it. All right. Hopefully that gives you an idea of what we look at and what we're worried about, what we're seeing. If there is some way to charge a billionaire for doing some of my research, someone please let me know, because I'd like to, I definitely would like to figure that out. S&P ended last week at 38.41. Last close, Friday's closing level was actually 38.11, excuse me. That's not true. It closed last week at 38.41. We finally had an up week. It wasn't a big up week, but the 2% on Friday lifted the S&P into the black. On Thursday, the S&P had nothing to show for a gain for the year. Jobs were better, but it's just people getting back to full work. Very interesting. Vaccines. By the end of May, we should have 500 million vaccines. If we have 500 million vaccines, that's more than enough for the U.S. population. So here's the question. When do we throw our nationalism aside, and when do we get these vaccines out to other countries? When do the richest countries who created them and take care of their own first get this out to end a worldwide pandemic? When do we get it out to lessen the different variants of COVID that'll come through the new generation as it goes through 2 or 3 or 4 people? It really is a question that is going to come down to the drug companies. It's kind of neat because Johnson & Johnson actually charges more or less a higher price than any of the other companies. Not more than a flu shot, though. I mean, it's a reasonable price, but they have much higher prices for their vaccine because they expect it to go on for a period of time. They're going to have different vaccines for different variants that are coming out. Whereas some of these companies were paid off by the U.S. government. They're going to get their one initial vaccine, COVID vaccine that won't really help the variants, get it out, and they're done. They're going to go on to something that's going to be more profitable. I tell you, though, from the sound of things and the worries that we might have an awful COVID flu season at the end of the year when winter comes again, we're more cooped up. I don't see a whole lot of the excess going out to other countries. I would like to think I'm wrong. I'd like to think that we're going to get many more vaccines than the United States would ever need. But we've seen this as Canada did this to us with the N1H1. We've done it to other countries as well. It will be very interesting to see if we're going to take care of the global pandemic and treat it on a global level, or if the United States is going to be selfish and treat it as a country level or a nationalistic level. God, if it was Trump, you would see the Democrats crapping in their drawers that how dare this selfish man doesn't help out the world. Haven't seen anything from Pelosi or Schumer that suggests that the money the U.S. government spent for vaccines will go anywhere outside the United States. In fact, even as it's manufactured, most of the manufacturing was done here in the United States, if not all of it, so that the vaccines stay here and don't go through problems with shipping out of one country into another. To be honest with you, I don't know how I feel about that. I would like to think if we have enough, it's time to share. And I think we will have enough by May. We won't get it out in a timely manner and administrate it. But if we have 500,000 or 500 million doses, you know, we're over by about 140 million. Get it out. There's no reason to have more doses when we have, 92 million vaccinated now? Get them out. These companies can keep making the vaccines. Get it out to stop it or at least slow it down on a worldwide level. All right, let's see what else I have for you. I was correct last week that our markets will end up. I'm going to say up because the stimulus bill will actually go into effect. As we get more details, it'll push our markets higher. It means I'm sitting in some things a little bit longer without adding protection to them, like Apple, like Ford. I'm just being, well, I better be right is what I'm going to tell you. Dow Jones is technically bullish. No, it's almost bullish. It still is technically bearish because of the MACD. So I do need to change this to bearish. It won't be bullish until the MACD crosses over higher. So we are technically bearish, but turning bullish. So I'm just going to go ahead and put that like that for you. Can't spell it right. You'd figure I'd spell it a little bit quicker. S&P, bearish. Lots changed since last Monday. And obviously the NASDAQ, definitely bearish. Turning bullish. Not happening. So last we thought it was turning bullish. It's now bearish. So our markets look for the downside. Two people just typed in, who the heck cares about the Dow? You know, 31 or 34 or 33 stocks, however many it is. It's a tradition. The only people that truly care about the Dow are the talking heads. There is no benchmark that people are benchmarked against the Dow. It's a tradition. I'm still saying a 0% return for March. We're obviously negative. Not much is happening on earnings. Oracle on Wednesday. I am paying attention to AMC to see if they're going higher. Ultra, DocuSign, JD, and Vail Mountain Resorts on Thursday. Buckle on Friday. Nothing, no bellwethers, nothing moving us on earnings. Economic reports are pretty quiet as well. We're going to be a news-driven week. Nothing internationally that I saw. With that said, I've got some very interesting two stimulus articles. Please take a look and read through them. I think it's very important. If you look on the pictures here on where this money is going for the stimulus, it seems like more of it is staying in the U.S. than the first stimulus that went overseas. Maybe it is more individually based, but it'll be interesting to see where it truly gets ended up or sent out to. The only thing I don't like is aid to state and local governments. Let's face it, those dummy governors who let their cities burn, they're getting a handout. Once again, I find it despicable that the states that are so poorly run are getting the handouts, but I appreciate and I hope it's going to the businesses that got hurt. That's all I'm going to say there. So much for hoping, right? There's one more chart that I think is rather interesting. If you pay attention to this, for one parent that lost a job, you're going to get around $66,000 for the government. If you're not going to be surprised on why people don't come back to work, there are some people that made half their salaries tax-free, which was 2/3 of their salary that they made the previous year is now tax-free, and they make an additional third by not working. I'm not saying there's not a place for welfare. I'm not saying that there's not a place for unemployment. There have been times in my life when I've used it. I was greatly appreciative of it, but this is ridiculous. Another one here to pay attention to. When you have unemployment that's higher than the state average salary, something to pay attention to. I've got another one. Consumers save $2.9 trillion in the pandemic. Their money's going to be put to work. Please do read through this one. American consumers flush with cash. Please read through this. I think I've had this out twice. A tech rollover is a major opportunity. An opportunity to buy FANG because they will come in favor again, especially since they truly won't be affected by the rising interest rates. An interesting explanation of the inflation that we're worried about, that we're looking for. A great read to understand the inflation. I threw this one in here just because I enjoyed it. I have not been retired yet. There are some times I've acted that way. Downsides of early retirement. You might not regret your decision, but you will definitely think you could have done more. Downsides of early retirement. You may suffer an identity crisis because you're no longer working. A lot of people identify themselves by what they do for a living. You definitely will second guess what you've done. People may treat you like a misfit. It's one of those things. I think I'd like to take the challenge of being treated like a misfit because I have had enough money to be able to retire. So I think that's a challenge I'm willing to take. The interesting thing is it says you may be surprised that you're not much happier. And really that comes down to you may get really, really bored. It's funny. I've got one friend that sold a business for like $7 million that is my go-to person to go golfing with. On the up days in the market, when I have a day off, I feel like I'm retired. I'm not, obviously. But a lot of those days I can do my research and I'm good to go golfing in the afternoon. I might miss the last 2 hours that the market closes. I make sure Keith's covering it and watching it for me, right? But I'm bored. There's no one to go with. Everyone else is working. I don't get the fun stuff. And someone just typed in, must have a hobby and things to do like fishing and guns and stuff and investing. My day's over at 2. Doesn't get dark till 7. My kids are at school or doing homework. If you catch a fish and no one sees it next to you, it's kind of boring. I got to come home, and then the kids ask me if I got it from the store. If you make an amazing shot from 1,000 yards away, it's got to be recorded. You get bored. It's difficult. So, with all that said, are there any questions you guys have? Are there any questions that you guys have? No, I'm not retired. In fact, I'm far from it. But there are a couple days I feel like I'm retired. Questions about interest rates, questions about what's happening in our stock market, questions that you'd like someone to give an answer to you for that maybe can be helpful. And of course, William, great question. So define several months. If you were to ask me, I think I need to see how much tax selling goes on this year in April. If next week we start to see a down market, we need to protect everything because that stimulus bump will only last a week. If we don't see selling off next week, we'll probably see it the last week of March, which isn't next week, it's the week after though, right? So we kind of have a 4.5 week March is the best way to look at it. The last week and a half will probably go through a lot of tax selling as people are selling off this year for what they expect to be a lower overall year because of the interest rate hikes and tax hikes that are coming towards the end of the year. Because we had such a good last year, you typically don't follow it up with another double-digit S&P 500 year. So with that said, this could be really short-lived. Our stimulus pop, our sugar rush, man, our markets are just like a teenager right now. You got to give it what it wants. Needs to get its sugar rush, its dopamine from video games. As soon as they're off of it, they're in a bad mood again. They're hard to deal with. It's just the way it is. So with all that said, I don't know, but I'm worried it'll be a lot. I guess I'm worried that the stimulus will not have the effect that it should, even though the majority of it this time looks to stay in the U.S. So again, the first one, too much of it seemed to be going to overseas for useless crap. What attention do I pay to dividend-paying stocks? Very little. I like dividend-paying stocks, but a stock can lose much more than its dividend. I do not look for a dividend being a criteria to own the stock. I'm looking at stocks that have a 12 to 24 month opportunity to double in their value. So the short answer is dividend paying stocks are not a prerequisite. They are nice in bearish markets, but my criteria is meeting a company with the opportunity to double over that 12 to 24 month period of time. And I typically look at that from December. With that said, I picked it right on Baidu, picked it right on Apple. Disney's already doubled from our 2-year period previously, but I think it has another 50% going up. Visa I'm unsure of. In fact, I'm ready to get out of Visa and move to a stock replacement strategy. Ford can double, Under Armour can double, Boeing can come close to doubling. So there are some opportunities there. It's nice that they pay a dividend, but it's not a prerequisite for what I'm doing. I just want to make sure that we get stocks that move and move nicely for you. Any other questions? If not, I hope this was helpful. I hope this gave you an understanding of what I see and how stock markets are moving. I hope this helps you understand how interest rate risk creates inflation in the United States and why or how we're funding the debt for other countries, but not necessarily ourselves. Guys, have a great evening. I hope this was helpful. As always, I appreciate you being here, and I look forward to seeing you next time. Thank you for attending the Hurley Investments market commentary, and until next Monday, I'll see you then. Bye-bye.